Love it. Well, thank you, everybody. I want to thank, obviously, our panelists for being here. And more importantly, I want to thank all of our participants for coming as well. And happily, on behalf of the American FinTech Council, my name is Phil Goldfeder, the CEO. Welcome you to our second Future of Finance webinar series. And really, really excited to bring you the latest and greatest in artificial intelligence and intersection with reg tech and regulatory best practice, with literally some of the leading voices and experts in the industry. And so it is my pleasure to have you all here and hope that you'll continue to join AFC as we look to the future of finance and bring together best practice and standards and thought leadership. And so with that, I would love to kick it over to our great friend, Jerry Buckley over at Orrick for his moderation and for what I'm excited is going to be a very, very great panel.
Thank you, Phil, and it's great to be with you. The work that AFC is doing is in educating public is really remarkable. You know, I'm Jerry Buckley, and I'm a partner, as Phil has noted, at the law firm of the financial services practice at Orrick, Harrington, and Sutcliffe, and I'll be serving as moderator today. And the subject we have before us today, as part of the Future of Finance webinar series of AFC, is AI is the solution to regulatory modernization. That's the proposition we will be discussing today. Our panel for this webinar consists of some of the leading thinkers and actors in the space of artificial intelligence and machine learning, and where they intersect with the regulated financial industry. Kareem Saleh is founder and CEO of Fairplay. Larry Bradley is CEO of Solas AI. Amit Sharma is the founder and CEO of FinClusive, and Andrew Davies is the global head of regulatory affairs at Compliant Manage. We decided, rather than my reciting their lengthy and impressive biographies, to let each panelist begin their remarks telling us about their involvement in the subject that we're discussing today. So let us begin. You know, in the course of a marriage ceremony, in some traditions, the presider says to the couple, "Life with its joys and its sorrows is as yet hidden from your eyes." And perhaps it's wise to acknowledge up front that while we see huge potential in the use of AI to expand financial opportunities and significantly enhance regulatory oversight capabilities, we are embarking on a journey not knowing all that lies ahead. For better or worse, we are making a commitment to go forward with the belief that despite the uncertainties, the promise of AI is worth the risk. And that said, we must acknowledge that financial institutions are implementing AI without the benefit of precise regulatory guideposts. What is out there is based on blog posts and speeches and white papers and a model risk management guidance that is more than a decade old. The big question for our panel is, what should regulators do to provide clear guidance regarding their compliance expectations for AI? And equally important, how should regulators and markets as a whole decide what that guidance should be? As if to anticipate this webinar, within the last 2 days, there was a media leak of a detailed 20-page civil investigative demand, or CID, apparently prepared by the Bureau of Consumer Protection at the FTC. It focuses on all aspects of the creation and administration of AI, of an AI-driven business model. It will take a while to absorb all the implications of this CID, but while it provides a roadmap, in the meantime, it provides a roadmap to the interests and concerns of an important federal regulator. As we consider the implications of this CID, it seems important that regulators explore not only the risks, but the rewards that AI can deliver. I personally believe that Gen AI has huge potential to enhance the consumer's understanding of how their loans are underwritten, creating a dynamic as opposed to static disclosures of today. And as we will discuss, regulators face hurdles in modernizing their own operations. AI can provide a key to more efficient, fairer, and more predictable regulation. Further, based on data generated by AI models, regulators might anticipate problems well in advance of a bank collapse. there is a case to be made that regulators need to focus on the opportunities for modernization of their own operations the AI presents, as much as the risks perceived in the use of AI by regulated entities. So let's proceed to get the benefit of the views of our panel on these issues. Kareem, fair play often makes the case for fairness as a service. Can you decode that term? How is AI helping institutions detect and monitor bias in their decision-making models? How is AI facilitating financial inclusion while also managing risk at financial institutions?
Yeah, thanks, Jerry, and thanks to Phil and AFC for having me. Hi, folks. Kareem Saleh. As Jerry mentions, I'm the founder and CEO of Fairplay. We cheekily refer to ourselves as the world's first fairness as a service company. And our belief is that just as Google built search infrastructure for the internet and Stripe built payments infrastructure for the internet, so too we need to build fairness infrastructure for the internet to debias digital decisions in real time. We make our software solutions allow anybody using an algorithm to make a high stakes decision about someone's life to answer 5 questions. Is my algorithm fair? If not, why not? Could it be fairer? What's the economic impact to our business of being fairer? And finally, did we give our declines, the folks we may have rejected, a second look to make sure that we didn't say no to somebody we ought to have approved? We're fortunate to work with some of the biggest names in fintech, including many AFC members who use our software to automate their fair lending testing and reporting, and to run second look and decline management programs designed to increase positive outcomes for historically disadvantaged groups. The good news is that these technologies, whether made by us or other algorithmic fairness firms, show a lot of promise. We regularly see the ability for lenders to increase approval rates by 10%, increase take rates through optimized fairer pricing by 13%, and increase fairness in particular to Black and Native American applicants who experience the highest disparities in the lending markets by upwards of 20%. So we think that the verdict is in. Algorithmic fairness is good for profits, good for people, and good for progress.
Thanks, Kareem, and congratulations on what you've been able to accomplish. Kareem started out working at our law firm many years ago, and little did I know that he would be such a major factor in the development of fairness tools. Larry, one of the forces that are driving companies to test and justify their AI models, and also let me note that you played a part in the production of the just released and groundbreaking report, Explainability and Fairness in Machine Learning and Credit Underwriting, which was released by FinReg Labs. There's a lot to cover, but it would be great if you could provide our audience with a high-level summary of the findings of the FinReg Lab report. You have to unmute. That's all right.
One of us, right?
Yeah.
Hi, I'm Larry Bradley. I'm the CEO of Solas AI, and I spent over a decade sort of building and creating analytics solutions and products before my co-founders convinced me to come over to the light side of compliance. But at Solas AI, we have a bias and discrimination detection and mitigation tool suite, really focused on the modelers and compliance analysts themselves, where we can provide them tools that stick very closely to the traditional legislation and regulatory decisions. And one of the key differentiators is we can improve fairness without using any protected class status, and that's a big deal. So yeah, we did act as one of the participants in the FinReg Lab study, and that was a great experience. And I think it did provide a lot of really informative insights. So one of them is that machine learning it can provide, fairer models, but that doesn't happen automatically. You do have to take, actions and, have responsible AI, processes and procedures in place. And there are tools that can help you do that. Also that the machine learning models, they are explainable. You can understand what is driving both the predictive value in models as well as what's driving that disparity. So we don't have to sort of fall victim to the, we can't understand what's happening in the black box anymore, that you can explain what's happening there. And that there are a lot of different automated techniques for being able to detect and remove bias and discrimination, and that for different use cases, for different model, for different organizations, those different tools may apply different, specifically to one organization or another, or they may need multiple tools in that same organization, depending upon how they're using it. And so, I do think that there was a lot from that first technology portion that that came out of that, and especially that those automated tools performed much better than the old manual techniques, so that there is like a real benefit to putting those in place. And then I think the more the latest report that they put out about the policies, that they did call out some of those areas that it would be important to add additional clarity for for the industry. Things like when it's important to do a less discriminatory alternatives analysis. And then, what are some of the standards or guidance around using some of those automated tools that in fact do use protected class? Is that something that is appropriate, or is that a COA violation? So I think there, were a lot of important findings in there, and I really recommend people going and reading that, because I think they did a great job in highlighting that stuff. I know I've gone on a while, but yeah, I think everybody who reads the news understands why there's a lot of pressure here. AI in the last 6 months has really hit the front page. And there is both a lot of excitement and a lot of worry about what the impact of AI is going to be. One of the things that I think we try to help people understand is that, a lot of those big fears about, massive events and killer robots, that's quite a way down the road. But there's a lot of stuff that we can focus on right now, like in lending, that if we start building that foundation, we'll be ready for those future events.
Well, thank you, Larry. And thank you for the insights on that really deep and useful report that Melissa Coity and the people at FinReg Labs have produced with your help. Andrew, Comply Advantage has focused on how companies prioritize risk and compliance's critical role in onboarding customer and the importance of companies' policies, controls, and procedures. Can you share with us how this applies to what you are seeing in terms of benefits and risks of the AI models?
Absolutely. Yeah. Thanks, Jerry. And thanks everyone for allowing me to participate in the panel. I really like what the AFC is doing. I really support the notion of inclusion and fairness that everyone's talked about so far. And I think access to financial services through fintechs is the future. It's here now, certainly with the introduction of open banking and then the sort of introduction of more egalitarian access to financial products here in the United States. Also, sort of interesting. Prior to working at Comply Advantage, I worked at a company called Fiserv, which considered itself the largest fintech in the world. And if you look back just a few years ago, the CEO of ING, the big Dutch bank, said, we're not a bank, we're a fintech. So it's sort of fascinating, because so all of the discussion so far applies to all of these organizations. And I liked your point about, even if something is difficult, is it worth doing? So I always use this analogy or quote from Charles Dickens, it's the best of times, the worst of times. Right, we've got lots of data. We need to make sure that data is appropriately used, but it's a worthy endeavor to make sure that we're using that data appropriately. Because if you look at the news today, $186 million penalty against a large global financial institution, and that's on the back of many other penalties that particular institution has suffered. Yesterday we found out that the former president of Panama had been indicted and found guilty of money laundering, leading to a 10-year prison sentence. If you go to one of the bodies that has advocated the use of machine learning around RegTech for a while, when David Lewis was the executive secretary of the FATF. You go to the FATF's website today, on the front page, there's a section where you click on it and talk about fraud, because the FATF's name itself is being used in fraud scams. So to come to your point, what do we do to help by using this type of technology? So at the start of this year, we produced a state of financial crime report, and my purview is really around financial crime and supporting that moral imperative to do the right thing for organizations. In that report, we identified, I think it was actually, I've got a note here, 58% of firms plan to increase the size of their compliance teams. That's unsustainable. I think I've got some other numbers here. 50% of firms said they plan to hire 21 to 40 senior compliance staff in the next 12 months. That's not sustainable, right? We're already in a sort of crunch with resources. What we do in terms of that particular use case that you mentioned, Jerry, is allow people to use machine learning, explainable as Larry mentioned, embodying those sort of eliminating bias in the models to prioritize the investigations that they're doing. What that means is they're more cost effective, the investigations, but ultimately it means that the investigators, the people who are looking at these types of nefarious activity, are actually empowered to be financial crime superheroes, rather than people that are just clicking buttons, remediating, an alert that could be related to fraud or could be related to money laundering. And of course, the predicate crimes for money laundering, things like human trafficking, drug trafficking, are really scourges on our society. So that's one way that we're using machine learning to prioritize the work of human capital that organizations have. And it really is a win-win in terms of managing your cost and being more effective in managing risk.
Well, thank you, Andrew. That's very helpful, and I'm going to turn to Amit, but I'll come back to a point you made earlier later on. Now, Amit, how is AI helping banks and partners comply with important obligations and standardize their approaches? For example, around financial crimes compliance and digital identity, as Andrew has referenced.
Yeah, absolutely. Thank you again for all the panelists and the AFC for putting this together. It's an absolutely timely topic, and I think I'm glad I'm going last one, because I can parrot some of the really good discussion points that my colleagues are here. But quite frankly, I do that deliberately because when we think about the tooling that Kareem has talked about around fairness, when we talk about compliance elements that require machine learning and advanced analytics that can speed up and make efficient financial crimes investigations and compliance. And when we think about the broader tooling that AI has to enable greater financial access, for us, as a former U.S. Treasury Department official, worked very closely with the Financial Action Task Force, a lot of the special recommendations in a post-2001 world, led several mutual evaluations of countries and jurisdictions, application of AML regimes. As a former regulator, also looked at the banks, non-banks application of these tools. And one of the things that we have seen, which intersects this dialogue here and the colleagues that just spoke, is that often compliance has been implemented as a very exclusionary practice, right? We have increased the regulatory burden on banks and non-banks to enable financial crimes compliance tools, and often therefore facing binary choices, which we think are false, that say either you are financially inclusive or capable, or you are at risk, and I can't have both. And that has disproportionately fallen on whom? Low, moderate income, non-whites, non-males, small businesses, immigrants, etc. And when you see that result, then compliance tooling has not been approached in the appropriate way. So that's what FinClusive is about, is really looking at the growth in financial crimes compliance, which has all the right intents. We need to know our customers. We need to track transactions. We need to root out illicit activity. All of that comes down to what we have, I think, blown up to be the business of mitigating perceived risk versus actual risk. And this is where AI tooling, advanced analytics, machine learning, natural language processing can really help do a couple really important things. And this is how we have implemented it. We are an orchestrator of compliance tooling so that organizations, instead of piecemealing 7, 10, 15 different compliance from know your customer and identity verification, transaction monitoring, we bring a lot of these disparate, but albeit really awesome tooling, but into a single workflow so that a fintech company, a banking as a service, a bank, a credit union, an exchange can have that tooling in a single workflow. And we leverage and are consumers of AI tools to do 3, 4 things much better. Faster processing of otherwise human-centric, inefficient processes. The second thing is in and around know your customer. It is a very dynamic risk environment. We have to be able to dynamically score and understand our client activities, our transaction activities, so that we continually understand the overall actual risk versus the perceived risk. The third is in rooting out inherent biases in the system. And this is, hats off to Kareem and the good work, because if we look at historical data, that has inherently been discriminatory and biased to many segments of the population. If we just codify that tooling in AI tools, then we're just going to perpetuate the problem. But that's where looking at the algorithms, looking at the fairness built in to how those tools are being leveraged can root out that bias. And ultimately, that dependency on data can enable us to not only complementary combat and interdict money laundering, fraud, and other illicit activity, but importantly, as Andrew rightly pointed out, it is not sustainable for the growth of RegTech and compliance departments in and of themselves to simply grow risk and governance controls, unless we retool compliance to be equally part of inherently increasing business intelligence value. All of money laundering comes down to one central question: do you know your customer? And it's not just to make sure they're a bad guy. It's also to ensure that your credit, lending, mortgage, and other business and profit centers of the institution know them to provide them the appropriate products to increase resilience and ultimately drive inclusion at scale. And that's what FinClusive is about.
Marvelous. Great summary at the end. Great cleanup hitter, as they say. I wanted to come back, Andrew, to something you said. In making my notes for this meeting, I had noted that I thought that Charles Dickens' opening line of The Tale of Two Cities, it is the best of times, it is the worst of times, was really appropriate. And in many ways, as we embark on this AI revolution, it seems those words really hold a lot of meaning for us. Dire warnings of machines controlling humanity have appeared in high quarters, and actions like the CID issued by the FTC and leaked by someone point to the potential regulatory risks that lurk behind the use of AI. But at the same time, it would really be foolish to run away from AI, and stick our head in the sand. If we don't stay in the game, independent of all the benefits that have been discussed here, we will also wind up falling behind, and others will basically step in and take our place in the space that we vacate. Indeed, it could be argued that putting a priority on figuring out how promulgating AI rules of the road is something the country needs to do is extremely important, both from an economic and from a competitive point of view. And I congratulate AFC for putting this subject before the public and really raising it and framing it. Jerome Levi, who is head of government relations, is the one who has, among others at the organization, has really given this a push and said, we've got to get this out there to be understood by the public. But what is the optimal way for the government to get its arms around the risks and the benefits of both the private sector and the regulatory community itself? The benefits they can derive from this new technology. What should be the locus of leadership on this issue? Who should frame the questions? What models make sense? Should we have a White House commission? Should we have congressional legislation? Should this be handled at the state level? Will financial services regulators lead the way? Let's turn to our panelists and get some thoughts on the way forward. And maybe we can reverse the order. I mean, and you could go first this time and give us your thoughts on that, if you will.
Great. I enjoyed being a cleanup hitter because then I can just refer to much smarter colleagues here. But I'm happy to jump in. It's a large question that I think takes a whole of government approach first off, because the applications of AI are just pretty massive. If we look at and focus on the core here for this panel and the AFC within financial services, and within the context of at least the areas that we focus, there's 2 or 3 areas that I think demand attention. One, and we've touched on a little bit. One is we're already seeing the use of AI tooling, advanced analytics to just create efficiencies in risk modeling and investigation. That is first and foremost. When you think about rooting out illicit activity, many law enforcement agencies, regulators, and financial enforcement from the supervisory level need this tooling to just do their job faster, to do their job more efficiently, and to do that job much more targeted. There's a lot of noise in suspicious transaction reporting. There's a lot of noise in underlying client data, their attributes, their affiliations, their transactions, their transaction types, their touch points. But when you can speed the processes up for investigations and risk modeling, that is massive. And I think guardrails around the focus of those elements are key. The second is in the opportunity side. And we talked a little bit about this, and it's the good work that Kareem is doing around credit and lending and the like. And that is ensuring that AI tooling from a guardrails and regulatory approach really at the inception speak first to inherent lookouts for biases and discriminatory data in the system. Remember, all of these AI tools are dependent on the data that is feeding into that system. If we start with garbage, we will end with garbage. And so we have to start with at least some benchmarks and guardrails around how to clean and understand data to then drive into the tooling so that, number one, we get outcomes that are talking to the actual risk elements. And importantly, we have filters for interpreting that data for decision making, who to lend to, how to lend to them, what structures and frequency of servicing, et cetera, that lending might be, in the same way that we dynamically risk score an individual when we assess their compliance risk. So those 2 elements, the inclusion elements on the latter side that I just described, and the guardrails that really impact and enable law enforcement and financial services environment, that will go a long way to, in the same vein, help protect the integrity of financial services while also enabling positive outcomes. Final piece I will say is that the innovation in financial services is predominantly moving outside of traditional banks, right? Fintech companies, web-based services, and the like. That means data is central. And it is true, banks are effectively technology companies using financial and personal data, right? So how are we now looking at fintech, banking as a service, and other non-bank services that are actually engaging more customers in more jurisdictions in more direct ways? This tooling with the guardrails around illicit finance integrity risks, as well as tooling around rooting out bias and discrimination, those are the 2 that I would focus from a regulatory perspective.
I appreciate your framing it that way, Amit. And maybe let's. Anyone else can speak up, but Larry, maybe you could. Amit has laid out. Here are 2 things that really 2 areas where we really have to move forward and advance if we're going to enhance and protect our financial system and our financial system that is in transition, as was observed, from some players who are larger players to others who are more nimble and innovative. But Larry, how do we bring this about? Is there, I mean, you've worked with FinReg Labs. Melissa was a Deputy Assistant Secretary of the Treasury, heads up FinReg Labs. But I was the staff director on the Senate Banking Committee years ago, and so think in terms of what are the one of the formats. What's the forum in which we're going to achieve the goals that Amit has suggested?
Well, I do think it's something that has to be done at all levels of the government. So a long time ago, I actually did a technology strategy for the House of Representatives. And, one of the key things will be, educating legislators. And, that's going to need to be at both the committee level, at the individual legislators, office level. And, from my perspective, I think every single congressional committee is going to need to have its own sort of AI subcommittee to understand how AI is going to impact its particular area of responsibility and oversight. So there's going to be that, but then in the executive branch, it's going to be very hard for the executive branch to oversee regulation and put regulation in without being, an AI, sophisticated AI user themselves. And there will need to be changes, most likely, though you're already starting to see them in the federal procurement processes and things like that. How do you fund AI R&D processes and provide more sort of like agile projects and things? And that's been something they've been working on for a while, and we're starting to see some of those things pay off. And most of the regulators and the agencies that have regulatory oversight, you're starting to see them have contracts and starting to build out AI capabilities themselves, both for their regulatory responsibilities, but also just their internal operations. And so, I think it's going to be the same thing throughout banks, the larger banks. How do you become an AI fluent organization? We talked about sort of, being a data fluent, companies, but it's really like, shifting to AI as well. And, how do you use AI and think about AI, how it can improve operations, but also the impact. And I think, one of the things that I liked about the way, the FTC laid out their investigation, it's almost looked like a blueprint for how a company needs to think about its own AI practices, and an agency would need to think about its own AI practices of, what did you do with the data? How did you create your models? How did you measure the impact and performance of your models? But then how did you measure both the negative and positive impact that your model would have downstream? And that sort of brings us, into my world where, we really focus on less discriminatory alternatives analysis. And, it's one thing to create a model that's fair, but having that requirement to look for models that are that could possibly be fair while still being business performant is really critical. It's very easy to meet that lower bar, but with AI, we're going to have to make sure that we understand for which business processes, which decisions, those bars need to be ratcheted up. So, I do think some of the legislation will need to be expanded, and there may be models that almost have to follow more like, a drug discovery and approval, workflow, because they're going to impact people's lives, in a very serious way, like, potentially self-driving cars and things like that. But then there are going to be other models that, we need to have a more expedited process where potentially the review comes in later. So, there are going to be these different levels that we need to think about. And I don't think it can be only top down or only bottoms up. It's going to sort of have to come from both directions and meet in the middle.
Well, Larry, I think one point you made, I would not have wanted to be the recipient of the FTC's CID, but as we all know, there are two ways that guidance is given. One is through the enforcement process, and the other is through rulemaking. And and of course, an informal guidance. But while I wouldn't want to have received it, I think it gives, it opens a discussion about what's expected. And it's interesting in that regard. You're right. But I want to turn to Andrew. Andrew, in the area of privacy, the EU took the lead and produced a union-wide standard in the GDPR. We have struggled here with state-by-state variations on privacy. It's ironic that this country, which invented the internet and is known for having established pretty sophisticated market regulation, which has made our markets among the best in the world, has seemed, to me at least, to be falling behind the EU in developing overall frameworks and developing, and now the EU is moving ahead on AI. So is there any urgency in having some nationally recognized effort in this space?
Well, it's funny. I was sort of thinking about something that you said earlier. What happens if we don't do anything? Well, the criminals are already using machine learning and AI to perpetrate their activities, right? And they don't have to worry about privacy. They don't have to worry about GDPR, CFPB, fair lending. They don't have to worry about that. All they worried about is perpetrating their sort of activities. And we certainly need some sort of national information sharing mechanism that go, and of course we've just introduced something similar to this in the UK. Part of the new sort of AML legislation in Europe addresses this information sharing. And as if we don't do anything, the criminals will obviously continue to move ahead. It's an arms race. But what they don't have that we do have is something that Amit mentioned, and that is we have data. Right across, if you think of a large financial institution, it has a massive amount of data about their good customers, about their bad customers. If we can create some sort of mechanism, notwithstanding any privacy concerns, obviously we have to factor that in, some mechanism where we can more effectively share data. Data is the fuel that drives the machine learning models that we're working on, and they can become more effective with more data. And I think that's something that can give us having some formal mechanism for that beyond what we do around 314B. Today, something beyond that, having associations that can set up information sharing around financial crime, that would be something that would have a material impact on managing financial crime risk at financial institutions.
Well, thank you, Andrew. And Kareem, coming to you last, well, you were first before, the last shall be first and the first shall be last. It strikes me, and I've written an article, haven't published it, that it would be very helpful to use generative AI and empower the consumer to inquire of their file. Basically pull back the underwriting curtain and let the consumer ask, well, what if I were to close these credit lines? What if I made a larger down payment? What if? And find out more. To me, a collaborative effort to underwrite, as opposed to a dynamic effort to underwrite, as opposed to a static, here's the answer. This is something that, as Larry knows, the explainability issue is one that FinReg Lab has worked on. But I think we could really create a much more positive experience and a collaborative effort with the lender. It's not in the interest of the lender to make a loan that's going to go bad, and it's certainly not, as we learned in 2008, in the interest of the consumer either. So there is an alignment of interests in many ways, and I think that generative AI, basically letting the consumer inquire about their credit profile, understand it. And if we had something that could do that, I could see it being used in high schools to train kids in how to manage their own finances on a going forward basis. What you're doing is sort of tending in that direction. What do you think of the idea?
I think we should get you in a room with some venture capitalists and you should start that company. I kind of love that idea. I think the ability to chat with your data is going to become useful across a bunch of domains. But I think the one that you've chosen, I mean, the way you kind of described it, I interpret it as almost like chatting with your credit report and understanding a little bit how maybe to interpret an adverse action so that you might be approved in the future. I mean, I think one of the great unfortunate things about our historical adverse action process has been the adverse action reason codes aren't terribly useful. But now with more high octane explanatory methods and things like counterfactual explanations, being able to dialogue with the credit bureau and say, hey, what would I need to do to get my score from a deep subprime to a prime score, or how could I be approved for this? What do I have to do in terms of either raising my income or lowering my debt burden in order to qualify for a loan in the future? I could imagine those tools being incredibly powerful. Now, of course, for one of those organizations to launch a tool like that, you'd have to be able to persuade the compliance officer in that organization that your generative AI isn't going to hallucinate or do something crazy.
Well, you know what? Isn't it true that if we're going to use generative AI, we're going to use AI, if we're going to have imaginary results, they're going to be bad whether we've shared them with the consumer or not, if they're ferreted out by a regulator.
That's true. That's true. Although generative AI and large language models pose an explainability and hallucination challenge that is different from the challenge posed by, say, tabular data.
Very true.
And so yes, although I think there are some limits to that argument, if I may disagree slightly with my old boss.
Feel free. You're my boss now. Go ahead.
I do also think that I actually saw an announcement about somebody funding a company like that. So I do think that's, so I do think people are working on that. Could also be more of something that is done by the, actual credit bureaus and things like that.
Yeah.
Using, that type of data. But the other thing is also the improved visualization tools and the improved techniques for visualizing data that makes it easier for consumers, but also I think going to the frameworks that we have in place, where we have the 3 lines of defense, making data more visual, more understandable, and the results of what they're doing, I think is going to be absolutely critical, because right now you get a lot of information about AUCs and AIRs and SMDs. Most people would have no idea what that means. And so continuing to invest in that ability to visualize it or translate it into, language that a manager or a salesperson or just a consumer would understand, I think is going to be critical.
Yeah, can I just say that, Larry and Kareem have made a point that is worth super emphasizing if it's lost on folks. I think a lot of this is really needs to be driven by what are the outcomes that we're looking to achieve, right? In the financial inclusion context, it's not just give someone access. It's how do you create true financial empowerment that, enables true economic resilience over time. That is an inherently not just morally and ethically astute goal, but that is a commercially viable goal for financial services providers that want to engage their client. I want to understand the actual risk of my client so I can get them in more products and services to benefit the lifetime value of that client. And that means don't exploit the heck out of them. That means provide fair tooling. In the same way, I want to get bad people that are exploitative out of my services environment, right? The outcome should help drive a lot of how we then tool, model, validate, and then implement the very tooling that advances the very outcome that we're looking for here.
Very well stated, Amit. Thank you. I am mindful of our time here because, and so I'm going to ask Phil, have we been granted a little more time, or should we try to wrap it up at this point? He's on mute. Go ahead. Or Becky.
No, I think the conversation is great. I'd love if you guys go on for a couple more minutes. I mean, not too much longer, but a couple more minutes if we can really just keep the conversation going. Because I think it's so helpful that sort of you're all touching on issues, but to what's fascinating and I think what's probably amazing for our listeners is sort of how you're kind of bouncing back and forth off each other and sort of letting the conversation flow. So I'd love to see this conversation flow a bit farther.
Well, certainly then. And Phil, I think that it truly is that if there's one venue where the thinking can be enhanced, it is at AFC. You're taking a lead in doing this. Your companies are the companies that are in the forefront here. And so we're delighted to be invited and have a chance to have this conversation with you. I'm going to now sort of open it up and let anyone say whatever, make any further observations they'd like to make on these subjects.
I just want to mention something in support of what Larry had said, and that's the visualization of data, right? So we talk about explainability. Why, and we don't want to talk about that in a vacuum. Why is it important? Well, in the world that I live in, it's important to be able to explain things to regulators, but it's also empowering to the analysts so they can make more informed decisions, which then themselves can feed back into the models. One of the things that I've been working on with Comply is leveraging our data in a more visual way, so people can not only see where there is potential risk, but also understand their proximity to risk. So we've been presenting data in that sort of graph way. And then, of course, you can, we've curated the data using machine learning, presented the data in this way, and then you can apply graph analytics to understand your sort of proximity to risk. And I think those visualizations are sort of super important to empower people to make the right decisions.
Picture is worth 1,000 words. Is that right?
That's right. To continue our theme of quotes, yes.
Yes, exactly. Yes.
Another point that I wanted to make is that this panel is a panel that is, I think, unusual, where we understand the technology very deeply. We understand the regulatory world very deeply, and sort of the human impact as well. And I've loved how Andrew has called that out a couple times. But a lot of the technology that's being developed and a lot of the technology that's being funded, it's not clear. And if anything, the evidence is there's an awful lot of technology that's being funded and developed that is really only focused on solving a very limited set of problems, usually around technology and making money, or a very specific business model. And thinking about how that applies to the regulatory environment and compliance, but I think even at a broader level with AI, how that's impacting the downstream users. It often seems like that's missing. The quote that I've heard is, compliance customers are tired of tech bros who've read a paper showing up and pitching them something shiny, and they want tools that solve actual problems. That mean they have to really understand the regulatory environment and both its positive aspects, but also its limitations.
We all know Steve Jobs committed himself to continually improving and continually having an experience with enhancing the consumer experience, and had in his mind the consumer. How is this product going to affect consumer? Now, that isn't necessarily going to lead to the most immediate profits, but sure has in the long run proven to be the right strategy. And that's, I think, a theme that's emerging here is, let's keep our eye on where we're trying to get. We're trying to get to a place where the consumer is better positioned. And if we can use our tools to do that, then we will not only solve the regulatory problem, and hopefully the regulators are equally on board on that, but we'll also enhance our economic situation, because that's what people want. And Kareem, you've headed in that direction. You had that vision. Any thoughts? You do have to unmute though, because
Sorry, forgive me. Yeah. So, look, I think it's a very exciting time for those of us who work at the intersection of finance and technology. I think that the consumers that represent the future of the financial services business are kind of demanding, fairness from their governments, their employers, and the brands that they patronize, but also demanding kind of seamlessness in the customer experience. And so, how you kind of deliver a 21st century experience in a manner that's equitable and gives people redress. I think that that's a massive opportunity. I think there's a bunch of companies attacking that problem in a bunch of interesting ways. I think, because we're in a highly regulated industry and these decisions matter, people have to kind of proceed with caution. So maybe not quite the move fast and break things model of technology development, maybe a more measured pace. But I think this is a very exciting time to be working in finance, to be working on these issues of inclusion, and to be focused on the question of how we harness AI systems to deliver on their promise and not their peril.
A few years ago, I worked with Joanne Barefoot, who many of you know, who heads up the Alliance for Innovation and Regulation. And we interviewed the heads of innovation at each of the financial regulatory agencies and asked them what was standing in their way. And we produced a report. It was a pro bono effort by our law firm to assist in this process. And it really, there are hurdles to the regulators accomplishing what we think they need to accomplish. I do think that, and among them are the regulatory process itself, procurement process, their ability to have the experience themselves of these tools, because you can't give it to them. You can't, they can't, in some cases, buy it. They don't have the budget. But I do think on the regulatory side, our financial regulatory side, there's a need for leadership and progress and moving beyond the gotcha phase to how are we going to make this better for everybody? We have some great regulators. By the way, I note that Rohit Chopra today or yesterday announced that he is forming an alliance with his European counterpart to deal with some of these, to think about some of these issues. But I do think our leadership does have to step forward and say, how are we going to use these tools ourselves and become familiar? Because they can't regulate it if they don't know how to use it, and they aren't using it really, and it shows. So I hope that we'll see them move in that direction. Now I'm seeing us coming up on the hour, so Phil, you can ring the bell whenever you think it's appropriate.
Yeah, no, Jerry, thank you. Thank you to you for always doing an amazing job moderating, to all our panelists. I'm excited to say that this conversation is going to continue a lot, but most specifically on November 14th at the American FinTech Council Policy Summit. We're excited that we were able to announce yesterday that in Washington, D.C., the largest FinTech policy event in Washington, D.C. will be on November 14th. So everybody, please go to fintechcouncil.org. I promise you this conversation is going to continue there with many, many other important conversations. So with that, I just want to thank all the panelists again, Jerry, to you. This is just the beginning of our work and the first of many, many, many more conversations we're going to have, together and with our policymakers and regulators in Washington and across the country. And so thank you everybody for joining, and we look forward to joining you again next time.